Good morning, everyone, and welcome to the Options for Income Weekly Update with yours truly, John Locke. I'm happy to be back in New Hampshire after spending about 8 or 9 days in Los Angeles. I know that a lot of you have sent me some emails, and I haven't responded to them. It's because I'm just way behind. I'll be catching up on those this week, so just sit tight. If I do not answer you by Wednesday, maybe you email me again because maybe I didn't get the message or it got lost or something, but I'm doing the best I can to catch up to that stuff. So I'm assuming everybody's seeing my PowerPoint screen. Excellent, excellent, thank you. So let's get going here. Just remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk in options can be substantial, so please be aware of all your risks prior to placing any trades. And the results and or trades are hypothetical computer-simulated trades that are believed to be as accurately represented as possible. However, actual results can vary with that type of thing. Come on over, if you're watching this on YouTube, come on over to our website. Check out our programs, M3, Bearish Butterfly, ROCK, M21, group coaching, and our Trading Triangle one-on-one coaching program. Join our mailing lists and get the free report, 7 Secrets to Become a Successful Trader, and sign up for the weekly webinar if you have not done so. And stay tuned for our programs that are currently in development with got a Trading Triangle book that I'm working on. And that's going to lead to an online self-directed Trading Triangle course, which is going to greatly reduce costs when that finally comes out. It's going to be a little while, but it is in the works. Also, we have the SSS Trading Series, which should be out this year. And for our long-term stuff, I'm going to be getting into the beginners trading market by doing options trading for beginners, and also do a DST, which is a directional spread trading system, in 2015. So that's if everything goes to schedule, that's what's coming up, and it's going to be great for a lot of people. All right, so let's take a look at what's going on in the markets, and I'm just going to switch over to Thinkorswim. If you remember 2 weeks ago when we last did a market update, that I was expecting the Russell to come up to work its way up to around 1215. We got to about 1213, 1214, I think, last Tuesday. So, excuse me, we're pretty darn close to that level. And from there, I was saying I'd expect about a 50-point pullback, which would bring us down to around 1165, which is down into here, possibly, coming all the way down to this 55-ish support area. That said, basically right now, what we have in the markets is the Russell is somewhat overextended. We've got some decent resistance at 1210 to 1215. We're there now. If I'm just looking at the Russell, I'd say that indeed, with the new information that's come in the market since the last time we talked, that we are still most likely to take some sort of a reasonable retracement here. It may not be this week. We may run sideways for a little while. But the most likely thing to do would be for this thing to drop off. Now, we do have, keeping in mind, though, that we do have some longer-term price targets up around the 1240 area. Also, if we look at the Dow, for example, we did have a breakout to new highs on Thursday. I don't put too much into this just yet because Thursday was a kind of a light volume half-day trading type of a thing, and sometimes you get false breakouts. However, if this breakout holds, that's pretty bullish. That may drag things a little bit higher. In addition, we have the NASDAQ, which has been essentially ignoring short-term price targets and just continuing to grind higher. And it has a longer-term price target up here at around 4,055. A lot of times these will turn early, like 161.8, which we're pretty much there now on the Fibonacci. However, should the Dow decide to break out, that will probably pull this higher into the 4,055 range. And with the SPX, we're pretty much holding, as far as this goes, it's pretty much paying attention to its shorter-term targets and its longer-term targets. But we are at a short-term target now. If we look at for example, like say a 60-day chart here, we have a nice little cup pattern in here, which we could essentially, if I get here, we could essentially call a price target here of around 1993. Not too much higher than we are now, maybe another, 8 points. If you're looking at 12.15 for the Russell, that's about another 7 or 8 points from where we are now. Those levels kind of tie in. So that would be a reasonable turning point for the SPX. Even now would be a reasonable turning point for the SPX. I mean, this is a little overextended as well. So basically what I'm trying to say here is if I'm just looking at the Russell, I would think that the market would come back down to this 1165. Looking at some of the evidence with the Dow and the NASDAQ, and particularly the Dow, if that holds this breakout, it may drag us to our longer-term price target in the Russell of 1240 before it reverses. I'd say there's maybe a 25% chance of something like that happening, a 75% chance that we either run sideways or back off here. So in general, I would expect the markets to be down this week. I would expect them to back off or run sideways for the week. And keeping in mind that not this week, but next week is expiration week. We do typically get up moves into expiration week. So if we don't get a reasonably large back off this week and we run sideways, we may break out a little bit higher into expiration week. So we'll have to keep an eye on that. I still think, given the information we have, I still think that the market will be down for the week. All right, so let's take a look at what's going on with our positions. It was a pretty active week for me, even though I was away as far as trading goes, so we'll look at that. If you remember 2 weeks ago when we were talking about this July V Condor, I was saying that the Russell's probably going to 1215, and if it did, it was going to be a problem for this, possibly creating a loss, or at least putting us in a position where it's just not worth being in this anymore. That's pretty much what happened here. Monday, we came up to here. If we look at, let me just close this off. If we take a look at what's going on, we have a delta of about -98, which is pretty much at our adjustment limit. We have a delta theta ratio that's greater than 1-to-1, which I don't like. Normally when this happens, I'm going to try and roll out my upper side. But I'm here looking at this and I'm saying, I'm at an adjustment point here. I got $3,500 down. If I take this and I actually roll this out and bring this up, it's going to put me into a pretty high risk position. Because if I did that, in other words, if I rolled my lower spreads, if I put this out to 12, if I rolled up my lower side and I rolled out my upper side, it put me in a position where I really couldn't win. And if I did nothing, it put me in a little bit too much risk here. I mean, the position's pretty much junk if I have to adjust it again. So what I decided to do here is I just bought back one of these 1,200 calls. And if we just push this forward a little bit, that put us in a position where our delta theta ratio is at least in line. Our delta's down to -50, and it put us in a position that looked like this. Just as a holding position to see what was going to happen. Figured maybe the market might back off. And that didn't happen. So on Tuesday, we got that large up move. And what I ended up doing into the day Tuesday is just closing the position because it just wasn't worth dealing with. Now, if you want to take on some directional risk here at this point, you could do something with this to make this a winning trade, or at least attempt to, but you're going to take on a lot of directional risk this close to expiration. It just simply wasn't worth it. So, I closed the position down on Tuesday, and we did that at a loss of near our maximum loss number. Or did I wait till Wednesday? I may have waited till Wednesday. What's our T-log number? Oh, actually, I waited till Friday. Yeah, all right. So I held it this day. We weren't at a whole lot of risk, but we were negative theta. I knew I shut it down. I guess I had the day wrong. So I backed this off. Backed off on Friday. Brought our loss down a little more. And on on Thursday here. I finally shut it down and took that at a loss of about 4,700. So near our maximum loss number there. So, this trade's very good usually in an uptrending market. This was just too aggressive of a move. I mean, it took a 100-plus point move in the period of time we were open. So that does happen. And not a big deal. But that was the unlucky trade of month so far. If we take a look at our next trade we had open, which was going to be, let's see, a Bearish Butterfly for July. I just got to find my notes on this. And just forgive me a little bit. Like I said, it was a busy week. Last week I recorded stuff very, very quickly, so I could have some errors in here. Let's take a look at the Bearish Butterfly for July. This going back to Monday. This actually has not been doing too badly. We had, as of this date here on Monday, we are below 21 days to expiration. We are in expiration guidelines. We scaled in 3/3, and we're looking like this last Monday. From here, towards the end of the day, we hit our maximum delta. We had to get this down to around minus 250 for delta. So to do that, what I ended up doing is selling off 9 of these 1160 butterflies and took the end of the day Monday in here. On Tuesday, keeping within our maximum of minus 500 delta intraday and about minus 250 towards the end of the day, what we ended up doing is buying 10 of these 1220s and then selling off our last 1160 and then selling off 5 1180s, coming into the end of the day on Tuesday with that large up move. If we take a look at our T-log, you can see here that we bought the sale of those 9 butterflies on Monday, the purchase of the 10 butterflies on Tuesday, sale of that 1 butterfly, and then the sale of for the 5 1180s right here. Put us into this position here. I'm still a little more negative delta than I may want to be, but this is the position here. There were no further adjustments, I believe, till Friday or till today. There's been nothing happening to this. As of the end of the day on Thursday, down about $2,000, looking like this here. Thing with this position is if the market doesn't move a whole lot and it kind of hangs here for a short period of time, this will come back very, very quickly. I'm just looking for, at this point, this close to expiration of this position, I'm looking for $5,000 and to get out. So if I can get the profit and loss up close to 5,000, we'll drop out of it, get rid of the price movement risk and move on. So that was not that complicated of a move. We're just doing the regular standard adjustments here at expiration on the Bearish Butterfly. And the trade is still doing okay. If we come to our ROCK position, this position I actually got lucky with the adjustments. So if we come back to Monday, if you remember, we started this thing in an M3 position, and we're still in an M3 position. Let's look at July ROCK. As of Monday, we're still in an M3 position, but our delta, that being the case, here's what we looked like towards the end of the day on Monday. Was getting a delta issue here. So what I ended up doing is selling, I think it was 4 1160, 1170 put verticals on this day here on Monday. So towards the end of the day, this is what we look like here. That sale of those verticals brought our delta back under minus 50, and our theta's doing good. So everything's looking good here in this position. As of Monday afternoon. As of Tuesday, what happened is the market outran this position. We were up 18 points in the afternoon, so we were all the way up to around 1210 or higher. Maybe I think it was 1213. That being the case, what we do with a rock trade normally, if we have enough time left, which we do with 17 days to expiration, we move into a rock trade. So what I ended up doing is gradually transitioning, and I can kind of show you how I did this. If we look at the T-log, the first thing I did here is I bought, because this can be kind of tricky transitioning in. So the first thing I did is I knew I wanted to be in an 1190, 1230 rock trade. So the first thing I did is I came in and I bought my 1190 butterflies at a little after 2 o'clock. Then what I did is I sold 1090, 1140, 1170, 1190 condor. Then I sold a 1090, 1140, 1160, 1190 condor, or two of those. And then I went ahead and I sold the call. And then I went in and bought my 5 butterflies at 1230. So let's just see if we can go to like 1430. It'll show part of that position change. So here, at this point, I had bought my 1190 butterflies, and you had a bunch of options that cancel each other out. And I had done the 8 condors, but I haven't done the 2 condors yet. And then I do these 2 condors here, like this, -2 + 2. Right, and that's going to put us into butterfly up here at 10 butterflies up here at 1090 after that move. So let me just clear that off. I'll go the next half hour. All right, that puts us into 10 butterflies here. And 1 call, which is still essentially an M3 with a really bad gamma trend problem. But that's okay because we're working our way into another position. I then sell this call off, and I then buy my butterflies up here at 1230, which you'll see in the next half-hour increment. So that's kind of how we gradually transition into something like this. All right, so here's my 10 butterflies here. Here's my, my 5 butterflies up here, my 10 butterflies down here. My delta is exactly about -180, which is what we want for entering one of these. And this is the position I'm in here at the end of Tuesday. I did very well because I bought these butterflies first. The market actually came down $3 on me before I got the rest of the options off, and that helped kick the profit and loss a little bit here. And not a ton, but by about $1,000, which is nice. And that's it. I think that was, yeah, that's the last adjustment there. So coming to Thursday afternoon. Here's what we look like as of close on Thursday, up about $3,800. It'd be nice if we do get some sort of a down move. That's not too large. I'd be interested in leaving this position much above a $5,000 profit as well. Just don't want the price movement risk right now because I am thinking that we come down to, the 1165 area. I don't know that I really want to fight it that much. It's going to kick me back into an M3. I'm probably not going to make a whole lot more money anyway. So realistically, if I get to the point where I have to go backwards in this, then I'm probably just going to close it because I'll probably be up close to 5,000 and just move on to August where things are a little more friendly. And that is it for the rock trade for July. The other thing we got going on is our M3 trade, which is a little different, right? The M3 trade is going to tend to stay behind the market and is intentionally designed to break even if the market runs away like this. So let's take a look at how we're doing with that. July M3, as of the end of the day, let's see if I actually did anything on the 30th. I think I adjusted this thing like every day. All right, so yeah, let's go to the morning. This is what we look like as of Monday morning. We are outside of the tent here. I could have rolled this up. Basically chose not to. I'm letting this hang behind the market. I am thinking the market does back down into this 1165 area, so I've been very hesitant to roll this up. And if we look at what's going on here, my delta was starting to get too high, so I started adjusting this. And I just, I did this this one a little bit earlier in the morning, all week here. So what I did is I bought 4 1180 butterflies on this day here. So if we go to the end of the day, I'll show you what that did to this position. Right, so all we're doing is we're rolling up some of these longs to get our vega under control and to help control our delta, while at the same time adding verticals in here. Like I said, I'm trying to hang back at 1130 with my shorts. Now, I may end up rolling this position this week if the market doesn't back off, but I'm still hopeful that we're going to back off a little bit, so I've been kind of holding this position a little bit. So I'm kind of peeling off. Now I only have 6. I have 10 verticals down here. I only have 6 at the top, and I'm just gradually pulling off the upside risk. So by the end of the day, I'm exactly minus 50 delta. My theta is good. My vega is good. I'm here, and this is looking just fine. Come to Tuesday, we got that 15-point up move. What I have here is some really funky looking things. What I actually did, I just converted these all at the same time. What actually happened here is on Tuesday I bought 1 1150 1180 1220 butterfly, and I bought 1 1160 1200 1220 butterfly. It's just kind of giving us this here, puts us in a position where I still have my 10 verticals down here with the 1130 shorts. Now I have shorts at 1250 and 1150 and 1160. I have my longs at 1200 and 1220. I'm just kind of stretching the position out, and I only have 4 verticals here now. Again, gradually just kind of pulling off our upside risk here. The market backed off on Wednesday, but still gave us a delta issue, and because of that, I sold 1 1150 1180 put vertical to bring our delta back to around minus 50. You can see that in here. And then I did another one of those on Thursday. And as of the end of the day on Thursday, now my shorts are here at 1160 and 1180. We're minus 38 delta. About profit and loss, about break even. Again, with a runaway market, this is designed to break even. I'm just kind of stretching this out a little bit. Like I said, I may end up doing a full roll-up this week. Will depend on where the market goes, if it goes up, if it goes down. But as of right now, we're still pretty good with a pullback down to 1170 here, which I don't think is out of the question in the next few weeks. And this is what the M3 looks like. And that's all we have for July trades. And if we shoot over to our August trades, we have going on as an August V Condor, which got no adjustments. So let's take a look at that. And that trade, by the way, is doing just fine. This is up $619. Looks essentially like that with no adjustments. If we get a continued up move, then we'll do this. I don't see a problem with this trade this month. This should be a really nice trade, actually. Should work out really well. And we have an August bearish butterfly, which did hit some adjustment points. Let's go back to yesterday. Actually, I think I hit them on Tuesday. Yeah, so let's go back to Tuesday. Go back to Monday. We'll show you where we were. So Monday, we're sitting here at with our 1160 butterflies. We have a scale-in point at 1200. We hit that on Tuesday. Keeping in mind, one of the things I watch on my delta theta ratio is, am I going to have a delta theta ratio problem prior to, I didn't have one as of Monday, but am I going to have one prior to my add point at 1200? And the answer is yes, I absolutely do. So that being the case, I know when I add this, I'm going to roll up and then add higher. So what we did on Tuesday, the market shot up, and then Tuesday afternoon, we brought this 1160 to 1180. We bought some 1200 butterflies. We come to Tuesday. We can see this move in the T-log here at the end of the day. I just entered it all at the same time. And we're down about $2,000. If you remember, I accidentally bought call butterflies, so we're still in call butterflies. I'm just keeping it the same. Rolled up to 1180 and 1200. This is what we look like end of day on Tuesday. And then if we bring that forward to Thursday, here is our new position. Here's what we look like. We're down about $1,300. We're sitting here. We have a next adjustment point at 1220 unless we have a delta theta problem. And that is it. That's all the positions that we have open, unless somebody tells me I have something different. Unless I missed something, I don't think so. That's all the positions we have open for the website. So does anybody have any questions? My question is it too late to enter a ROCK trade for July? Yeah, I mean, you got, what are we going to have as of today? 12 days left. I mean, unless you want to do some sort of a small expiration trade, I'd probably stay out of it and wait for August for that. So yeah, I'd stay out of the ROCK trade for July, unless you like to do weeklies. Okay, here we go. How many days to enter do you invoke the tighter rules for Delta? Okay. On which trade, Mary Ellen? Oh, okay. So in the Bearish Butterfly, 21 days to expiration, I will. In other words, we use the regular scale-in rules and the regular Delta guidelines on the Bearish Butterfly until 21 days to expiration, and then normally I'm going to kind of gradually transition into expiration rules. From there, definitely by 7 days to expiration, you should be in full expiration guidelines, but especially in a grinding up market, I'm going to tend to do it 21 days to expiration. All right. Could I review the adjustment criteria for the V Condor? Essentially what we're doing with a V Condor, and I mean, I'm going to give you the simple guidelines, is the position size that if you have 15 condors with one straddle, you're essentially going to be minus 100 delta or positive 50 delta, and our adjustment is to buy back the shorts. We do have a situation where if the market sits in the center of the V, later in the trade, if our theta gets down to near zero, then what we're going to do is widen that out to raise our expiration line. And if we get to a 1-to-1 delta theta ratio on the upside, usually what we're going to do is going to roll out the upper side 20 points and roll up the bottom 40 points. However, that's a little bit subjective, because sometimes that's not going to do anything for you. Sometimes you have to kind of play around with how far up you roll the lower side and how far back, or if you're going to roll the upper side up at all. And at some point, the trade's really not any good anymore and you exit it. But that's essentially, in a nutshell, what the guidelines are. Okay, so do I tell my students real-time the trades and all the adjustments? Oh, no, I don't do anything. I don't put anything out real time. If I did, I'd probably put it out to everybody, but that's too time consuming for me to do. All right, how aggressively do I trade? Well, I defend that July M3. I got out Tuesday. Not sure exactly what you mean to that. I mean, I'm just going. What I'm going to do is I'm just going to watch my downside. I always want to allow for 30 or 40 points down without too much of a problem. And my upside, I'm just planning on breaking even if the market continues to go up. So if the market doesn't back down, it's probably going to be a break-even trade for the month, and we'll move on. I could certainly be more aggressive with it if I wanted to, and with my live M3 position, I probably will be a little bit more aggressive with it and make a small profit for the month. But within the concept of the M3, with what I'm trying to teach you guys, I'm trying to teach you as little risk as possible, and that position is designed to break even if the market does not back off for us. If the market does back off for us, we should be able to make something. So, and it should be pretty good even if we get a 30-point drawdown in one day, and go from there. All right, so let's see here. In my existing buy rock trade, if you have to roll back, will you go into a cap position or keep it as a rock with one rollback? Right, so what I'm going to do is in this position, what I'm going to actually do, because it's going to be up near my profit target, well, it's going to be up near 10%. If I have to roll it back, I'm going to close the position if I have to roll it back. Normally, if I wanted to stay in the trade, I would go as a rock with one rollback and take a look at what the position looked like. If I roll it back and my delta is too negative, I will scale into the upper butterflies, put it into a cap position, and play it out that way. So it's a little bit subjective there. By guidelines, all I would do is roll back into a rock half rollback. Being close to expiration, you may be better off to go into a cat trade. So, and I would imagine you probably would be, depending on how aggressive that down move is that put us there. So if we're just kind of wandering back to an adjustment point at 10 or 15 points a day or something, then that's not a problem. But if we get a 40-point down move today, for example, I would continue. I would stay in rock half rollback. Feels like it's going to be an aggressive move. All right, on a V condor, do I roll the whole trade or just the call side? You're going to have to roll the put side. If you just roll the call side, you're not going to have enough credit left to make any money. So you're going to have to, usually the call side 20, the put side 40 on the roll. All right, back to the V condor. How far from expiration is that adjustment made? Usually earlier in the trade. If you try to roll back a call side, like I closed this trade out 18 days to expiration because I couldn't get any credit in the call side to roll it back. So it's less a far from expiration question. In other words, you might do it any amount of time from expiration if you have the credit. If you have a really volatile environment, you can do that right up a couple of days next to expiration. If you have a very low volatility environment, sometimes you can't get any credit 25 or 30 days to expiration. So most of the time you can do it till about 20. Get too much under that, you don't have much left in it. All right, so I'll take a couple of more. I have to reduce capital in a rock trade. Yeah, so if I go back to this rock trade, and we talk about this in the courses how to do this, but if I go back to the rock trade on July, within what we show in the sample trades. Excuse me, just having a frog in my throat here. As far as we show in the sample trades, I don't get into this because I don't want to make things overly complicated. But right now we're pulling. Well, we only have about 32,000 capital, but there will be times when you get into this, and you might even be this far into the trade, and because the volatility is really low or you're close to expiration, you maybe have too much capital in the trade, and it's going to exceed 50,000 planned capital. So, all you do here is you roll in your outer wings. So I can do this +5, and I can essentially be in the same trade. In this case here, I have a little bit more negative delta than I might want to. I can actually bring this down a little bit more. But this puts me in a very similar position. My theta is going to be knocked down a little bit, but I have a very similar delta number. I have very similar profit targets, but I've cut my capital here down to about 18,000. And you can do this in general to make your positions more efficient. But you can see my profile is very, very similar. And I still have a lot of profit potential. It does hurt the efficiency of the trade a little bit, but you can keep your capital down that way if you have any kind of a capital issue. So that's how you do that. That's all you do, is cut that in. All right, so we consider trading calendars or double diagonals in this environment. There's nothing wrong with calendars and double diagonals. Most people don't understand them, so they're a little more complicated to understand because you're working with front month volatility versus back month volatility, and also your expiration line is not consistent. So your value at expiration of your front month option has a lot to do with what the back month options are worth. And for that reason, I don't particularly like calendars and double diagonals, because I like to know what my position is worth at expiration, and I don't know that with a calendar or diagonal. So I like to stay with my options generally in the same month. But I do have students that trade double diagonals and calendars, and I do have we do both volatility plays with them, and we do directional plays with them, and we do market neutral. But you only want to do it if you know, if you have a good idea what your front versus back month volatility levels are. Otherwise, you're kind of trading blind. So nothing wrong with them, but a little more complex. All right, so if the rent backs down this week to 1170, would I stay in the bearish butterfly? Yeah, I mean, I'm just looking for an opportunity to get out of that. I'm going to stay in it till I'm up close to 10%, and if I can get up close to 10%, I'll get out of it. I'll probably hang with it with a down move as much as possible. But 1170, if it pulls down 1170, it's going to be a real pain. So I'm not interested in really taking maximum loss on it. It draws down much more than 10 or 15%, much more than, well, probably 20%. I'd probably consider leaving it. All right, and the last one is just back on the V condor. Would I turn a straddle into a strangle? Yeah, I turn it on a V condor. I'm assuming that's what you're talking about. Yeah, if the market hangs out, if I look at my August V condor, for example, I mean, I wouldn't be interested in doing it now, but as I get closer to expiration, if I hang out in this range here for an extended period of time and my theta number gets down to, my theta number gets down to like, under 10, for example, I'd probably start, and I'm not too concerned with a huge market move, then yeah, I'd be interested in widening this out and raising up this level so that I can basically start taking on and locking in some profits here. But other than that, this is going to pretty much stay the same. All right, I think that's all the questions that we have for now. Thank you, everybody, for participating and hanging with me here. We'll be back to talk to you next week with the update, and have an awesome week, everyone.